In this video we're going to talk about one of the most, if not the most important aspects in trading, and that is risk management. Understanding this and knowing how to apply risk management over and over again on every trade is going to be an absolute game changer. This is one of the things that I see going wrong for most of the beginning traders over and over and over again. So please do yourself a favor, watch all the way to the end. In this video we're only going to scratch the surface. I can talk about the lengths and the depths of risk management for hours and hours, but what I'm going to show you and tell you in this video is absolutely already vital. If you understand this and know how to implement it, trust me, you are already ahead of the game. So what I first want to start off with is that we have these three possible long setups. We have trader A, B and C, and on every trade the trader is risking $100. And my question to you is, which trader is going to make the most amount of money? Is it trader A, B or C? So now, how do you need to read this if you have never seen one of these tools in Tradingview? And that is that this white line is kind of the zero, this is kind of where you enter. Here, the end of the red, that is your stop loss. This is where you exit the trade. And here, the green, that is where you take profit, where you also take full profit on the trade. Here, exactly the same. This is where you enter, this is where you exit in case the trade goes against you, and where you take profit. And third one, exactly the same. So let's say for all three traders, the trade is working in their favor. So this one here takes the trade and then eventually goes up, takes profit here. And for this trader, exactly the same. And for this trader, exactly the same. So if you see this, he risks 100 and he gets out here on the top. How much money is he making? For this trader, exactly the same. $100 goes out here on the top. How much money is he making? And here exactly the same. In other words, this which trader is the most profitable? Please let me know in the comments. Just your first thought right away. Boom, write it down. Let me know in the comments. And then I will give you the answer in a few seconds. And the answer is none of them. None of them will make more money than the other. You can see here in the tool the risk to reward ratio. That means how much are you risking compared to how much is the possible reward if your trading setup plays out. Well, I just told you that all of them are risking $100. In other words, as you can see here, all the tools are exactly risk reward to 2. That means all of these traders are risking $100, and all of these traders, if the trade plays out, going out at $200. So they're risking 100, getting out at 200. So in other words, their risk to reward for all traders is exactly the same. And the only thing is where they enter, where they exit and where they go out is just a little bit different. This is the basic idea of risk to reward. Knowing where to get in, where to get out, how much money you're risking and how much money you're gaining if your plan plays out and you're eventually then taking the profit. Is there a good or is there a bad? No, it isn't. Every trading setup is different. Every trading idea is different. Even the style of trading between traders can be completely different. We both can take the exact same trade, but based on different ideas and different exits. For example, let's say you are taking this trade and I am taking this trade. We both enter at the exact same time, but my exit, my stop loss, is just a little bit lower. I like to have a little bit more wiggle room, and you say, well, I have a strategy that is so tight, that is so good, I can enter and have a stop loss much closer by. And then I say, well, if I want to be profitable over time, I need to get out on a much higher level, because if I go out here, guess what? I have 0.8, so that means I'm risking 100 to only gain $80. I can only do this X amount of times, and then eventually I am losing money. So what you want to have with your risk management is always have at least a risk to reward of 1 to 2. $100 in, $200 out at least, or $10 in, $20 out, that doesn't matter. Now the fun starts when you are able to find trades and trading ideas and strategies, when you are able to increase that risk to reward to maybe 1 to 5, 1 to 6, 1 to 7. That's also one of the reasons why I like trading crypto, because it's much easier to find these kinds of trading setups with a high risk to reward, so 1 to 5, 6, 7 or even higher, than to find them, example, on stocks or on forex or commodities. So I like that idea. It's also sometimes much more volatile, that your trading idea can be 100% solid, and then something happens in the market and you just see price dump and you absolutely get stopped out. But yeah, for crypto, sometimes it can be very nicely volatile, and therefore it can really add up. Now, with that being said, there's also a reason why I'm showing you this chart and I'm talking about crypto, is because if there's one space that is well, pretty toxic and pretty misunderstood, then I think it is absolutely the crypto space, because man, oh man, there are so many cowboys in this space, and it is very, very likely impossible that once you start trading crypto, you somehow already saw people on social media trading this, and you somehow already saw these huge P&L shots of people making, I don't know how many hundreds of percentage and huge amount of money, and then you finally thought, oh, I also want to make so much money, let's get into crypto, and you absolutely get wrecked. Now, one thing that I notice a lot with a lot of these influencers or fake crypto gurus is that they have absolutely no idea about risk management, and are just trying to long a bottom and then hold the trade as long as possible, so that eventually they can say, ooh, look at me, I made so much money. But what they're not telling you is how many times their trade got stopped out, they got liquidated, before they eventually caught a good trade. So for example, something that you could have seen is that, let's say price here goes up and it goes down, and the trader gets into the trade here, and then the trade goes a little bit in his favor, and eventually comes down again, and it stops out the trader, and he gets into a loss, and then he longs it again. So, woo, look at me and my profit, and boom, he gets stopped out again, and then on the third attempt you can see that he's finally in a winning trade. Now, let's say that he is getting in once he sees, well, I think price is going a little bit up, and we are now here on the 4 hour, and he's entering somewhere here. Then eventually he's holding the trade open for a very long time. Yeah, so he's getting in here. He's holding it open for 18 days, and the price goes up 19%. So let's say you maybe also use 10, 20, 30% X leverage. Then you see in his P&L shots and his videos, he's up hundreds of percent. And oh my God, what an amazing trader. I wish I was like him. Anyways, but if you then really look at what was a good risk to reward, or what was the idea behind the trade, there only could have been one solution. That is that if he takes this kind of trade, that is a 1 to 3. So maybe he risked, let's say, $10,000 on this trade, and he was only, of quote unquote, only up 30,000. But maybe he already lost 10,000 here, 10,000 here, and now finally he has a good trade. So he's losing 10, another 10 is 20, and now finally he has a good trade. So even if he exits here, he only, quote unquote, makes 10,000 after losing these 3 trades. And that is something that you see a lot at crypto, is that they're trying to long the bottom, absolutely no idea about risk management, only to see themselves getting liquidated and getting stopped out again. And this huge move that started off here from approximately 60,000 all the way to 72 looks incredible, looks big, high leverage, high percentages. Oh my God, this guy is amazing. But if we're really looking at what kind of risk to reward was he applying, it's actually not that great. I mean, at 1 to 2, that's, like I just said, that's where it starts off with. But eventually you want to have much tighter trades, because let's say he had an idea, and that was, I'm going to long this absolute bottom and have a super tight risk to reward, because I said if this is not the bottom, well, then we're going to go much lower. Look at suddenly what is happening if you have a much tighter entry and a much tighter stop loss. Then suddenly this trade becomes a 1 to 13.5. In other words, $100 in, $1,350 out. Now it is an amazing trade. But a lot of these traders have no idea about risk management, or when to get in, when to get out. Matter of fact, let's say that he effed up a couple more times, so he is also losing this trade right here, because he thinks a new all-time high coming, we're going to 150,000 or a million, billion, gazillion dollars. He gets stopped out here again if he has a stop loss underneath. You know what, let's just try it again, and we get stopped out again trying underneath. And now we are trying it again. Yeah, so we already lost X amount of trades, a lot of them, and we are finally catching something of somewhat of a bottom. And he thinks, I am going to get in somewhere here. because now we're also getting higher than this low right here. I'm just putting my stop loss underneath because hey, I'm getting liquidated at some point. So or I have a stop loss, or with a high percentage I'm just getting liquidated, right? So let's say it's a 10x leverage, then your trade gets stopped out by the exchange if you get liquidated, because you cannot lose more than the money you put in. But look at this idea. If you go in here, at best for this moment of time, you were up only 2.5. So in other words, measured in time, you get in here, you were up 20%, and then eventually a month later you were back at entry. A lot of traders would have stopped out their trade or just take the break even, and then only to see that it runs up. And here we're talking about 90 days, 3 months before the trade really starts running to the upside. So you might see this trader that has this trade open for such a long time and hundreds of percentages in profit, but you have to understand that actually the risk management here, and also factored in the factor of time, it was actually just a terrible trade. Now I know a couple traders who are incredibly good in managing their risk management, like I just showed you, and they are entering not, for example, on a 4 hour, but on a very small time frame, for example the 5 minute. Now let's say this was the 5 minute, and they're saying, you know what, I actually have a great trading idea. I think this is very much likely a bottom, and I'm going to enter once I see that we are reclaiming these local highs right here. Now the stop loss here is not that big. It is 3.5–4%. That is very much acceptable here in crypto. And then eventually they're taking profit above these local highs right here, and they're leaving even a little bit of a runner. So now you already have a 1 to 4 on your risk management, and eventually if they say I'm going to leave a little bit of a runner, so let's say 20% of the trade, I'm just moving my stop loss to entry once I'm taking profit here, and whatever comes out, well, whatever comes out, and we'll see how it goes. And then you can see that sometimes you have these huge runners to the upside. Let me move this so you can guys watch it. And then suddenly you can see that something with a quote-unquote normal trading idea, with something with a healthy risk to reward, suddenly can become a huge runner. This is almost a 1 to, well, actually it was a 1 to 20-ish, that you maybe put in $100 and you take out 2,000. Well, for the runner of course is then way lower, because that is just a fraction of the amount that you put in. But I'm just trying to say is that finding a good risk to reward, not trying to aim constantly for those huge swings, for those P&L shots, for someone sucking your balls on social media saying, oh my god, you're so amazing. Just always trying to apply good risk management again and again and again is so incredibly important. So please don't be misled by what you're seeing on social media. And again, I'm mostly seeing this in the crypto space, and I find it extremely toxic. So that's so important. And if you have a strategy that is maybe not so good, let's say you have a 50% win rate, but eventually you have a good risk to reward, so let's say only 50% of your trades are playing out, but your risk to reward is, let's say, always, well, let's make it a little bit high, 1 to 8 ish. That means that you lose one trade and then you are down, let's say, $100, and then you win one trade and then you are up $800, right? 800, there you go. So what is then your profit after 2 trades? It is 800 minus that $100 loss is you're up $700. And this is what I mean with having a good risk management and a tight stop loss, is that you eventually can have losing trades, but eventually over time you are making a lot of money. And we're saying that this strategy that I just pointed out is only profitable half of the time. So again, next time, again, $100 loss, $800 profit, and then you're already up $1,400. So this is how you add up eventually to your account. Now there's only one risk in this, and that is that people saying, okay, so I need to have a very tight stop loss, and I need to aim for a pretty high amount so that I have a low risk here, only $100, and I can take out 700, 800, 900. And is that then eventually you are going to try to aim constantly for these huge swings by saying, okay, I have a super tight stop loss and I need to have a high target, because hey, that is how I make a lot of money. But then you will see that maybe a lot of times you also get stopped out. Now this, at this point on, this is where strategy come into play come trading ideas and invalidation and market structure and all kinds of more technical stuff. But it starts off with having a solid risk management and risk to reward. So let's say you're saying I'm aiming for these highs and I'm getting in here on this trade. This actually looks pretty good, right? You have a 1 to 5 right here, and then you're getting in somewhere here. Your stop loss goes underneath this low. You're aiming for these highs. That looks pretty good, but eventually you see the price is coming lower and it would have stopped you out. Well, maybe the idea is pretty okay, and eventually you can say, oh, if I just hold the trade, then I would have gone much higher, and then I would have made so much money. This is, of course, where the danger comes in, is that you're going to hold every trade and have no invalidation because, hey, maybe it reverses and hits your target. But like I said, this is more strategy. This is, you could say, okay, I'm taking some profit here. Stop loss to entry. Okay, we did not reach my target from these highs right here, but eventually I was able to take some profit. Also left something on the table, but it is what it is. But my risk management eventually was solid and came into play because, hey, even this trade right here was already a 1 to 2. So my first day profit was already with a proper risk management. Like I said, the rule of thumb is at least a 1 to 2, and eventually you can also aim for higher, something that makes sense. And then eventually sometimes you have those runners. Let's say okay, you know what, I got stopped out, but the idea is still valid. Matter of fact, I'm just going to take the trade again. Now I'm going to have my stop loss a little bit wider because I need to cover these lows, and now I'm still aiming for these highs. Guess what, we again have a setup of at least 1 to 2, a proper risk management. We're saying we do not want to see these lows being taken out. We are entering here on these candles, stop loss underneath the low, and we're still aiming for these highs. Now we even could take 2 trades that would have played out and the exact same trading idea, the almost exact same levels with these highs. These lows are then a little bit different, almost the exact same entry, and still make a good profit. And you do this with proper risk management. I hope that this was useful. If you have any questions, please let me know in the comments, and I would also really appreciate it if you like and subscribe. I'm going to upload more educational content. Also have a playlist. If you just go to one of the lists, you can see that I have more educational content about VWAPs and all kinds of other tools that can be super handy for your trading journey. Thank you guys so much for watching all the way to the end, and see you guys very soon again in the next one. Bye bye.